Ladies and gentlemen, good day and welcome to Borosil Renewables Ltd Q4 FY24 earnings conference call hosted by Axis Capital Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. And I'll hand the conference over to Mr. Jiten Rushi from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Neha. Good afternoon, everyone. On behalf of Axis Capital, I am pleased to welcome you all for the Q4 and FY24 earnings conference call of Borosil Renewables Ltd. We have with us the management team represented by Mr. P.K. Kheruka, Executive Chairman, Mr. Ashok Jain, Whole-Time Director, Mr. Sunil Roongta, Chief Financial Officer, Mr. Swapnil Walunj, Head Marketing, Mr. Balish Talapady, VP Investor Relations. We will begin with the opening remarks from the management, followed by an interactive Q&A session. Thank you, and over to you, sir.
Thank you. Good afternoon and welcome to the Borosil Renewables Financial Year 2024 investor call. The board of Borosil Renewables on 27th May approved the company's financial results for the year ended 31st March 24 and for the last quarter of that financial year. Our results and an updated presentation have been sent to the stock exchanges and have also been uploaded on the company's website. We will discuss the operations of Borosil Renewables on a standalone basis as well as on a consolidated basis. I will also provide you with some highlights of the operations in our overseas subsidiaries. During the financial year 2024, the sales volumes of the company rose by 79.8% quantitatively due to full year's working of its new plant, that is to say SG3, which was commissioned from 23rd February 2023. Unfortunately, the significantly lower prices saw the company's recorded net revenue from operations rise by just 43.3% over financial year ended 31st March 23 to rupees 985.87 crores. Average selling prices during the year were about 109 rupees per millimeter per square meter, a serious decline of 20.2% as compared to rupees 136.5 per millimeter per square meter during the previous year. Export sales during the year, including to customers in SEZ, were almost flat at 199.78 crores, comprising 20.3% of the turnover as against 195.25 crores in the previous year. While direct exports were also flat at rupees 181.92 crores, last year being 181.07 crores. Reviewing the last quarter of the year gone by, the company recorded a net sales of 227.23 crores as against 187.54 crores in quarter 4 financial year 2023, a 21% increase. From a quantitative standpoint, sales volumes had risen by 57% during this period. Average ex-factory selling prices during the last quarter were about rupees 98.8 per millimeter per square meter as compared to rupees 132.7 per millimeter per square meter in the corresponding quarter in the previous financial year, a decline of 25.6%, leading to a steep erosion in the margins. Some more information about financial year 2024. Relentless dumping by solar glass producers in China and Vietnam caused prices to remain continuously depressed over the year. As informed earlier to shareholders, after the lapse of anti-dumping duty on solar glass in August 2022, the floodgates were opened for duty-free dumping of Chinese glass. Unfortunately, this was coupled with a dramatic reduction in the cost of ocean freight from China and a further drop in FOB prices from China. Put together, this caused a severe decline in the landed prices of imports, leading to a slashing of our margins. Consequently, the EBITDA during financial year 2024 was 118.93 crores, corresponding to a margin of 12.1%, which was a steep decline as compared to an EBITDA margin of 25.7% in the previous financial year. During the last quarter, the EBITDA was at rupees 13.13 crores, corresponding to a margin of just 5.8%, as against 20.3% in the corresponding quarter in financial year 2023 and 9.4% in the previous quarter. In terms of selling prices, the last quarter saw a decline of 3.5% over the preceding quarter as the dumping continued unabated. Additionally, our production efficiencies were lower than normal in one of our furnaces for a few days. Against this backdrop of a collapse in selling prices, the company recorded a post-tax loss of rupees 16.52 crores for the year ended 2024, as against a profit of rupees 88.54 crores in the previous year. The last quarter recorded a post-tax loss of 13.37 crores, as against a profit after tax of 11.69 crores for the same quarter in the previous year. The solar industry is suffering from dumping and has struggled throughout the last year. Solar glass imports continue to remain completely exempt from all import duties. The 15% basic customs duty leviable on the imports of solar glass, but exempted since 1999, was set to end on 31st March 2024. You can well imagine the surprise and extreme disappointment in the industry when this exemption was unilaterally extended until 30th September 2024. Following our representations to multiple authorities for a review of our issues with dumping, we were advised to apply for imposition of anti-dumping duty on imports from China and Vietnam and a countervailing duty against imports from Vietnam. Our applications to DGTR in this regard have been prima facie accepted and already taken up for investigation. The government is now fully seized of the matter and satisfactory decisions are expected to follow, perhaps in the next 5-6 months. Until then, the domestic industry will have to continue to contend with the pressure of unrealistically low import prices and ongoing injury due to dumping. It is ironical that domestic manufacturing of solar cells and modules, both of which have high import content, enjoy basic customs duty protection at 25% and 40% respectively, while solar glass, a capital-intensive product with very low import content and high local value addition using skilled labor, in the absence of duty, is subject to relentless attack by subsidized Chinese solar glass. With the result, a significant portion of the domestic capacity is remaining unutilized, unsold due to Chinese dumping, where there is enough demand to serve. Solar cells and modules also enjoy ALMM approved list of models and manufacturers and VCR domestic content requirement benefits which make it compulsory for the buyers to use the local production. There is absolutely no such benefit extended to solar glass, and the module manufacturers are free to import their entire requirements. We have petitioned the authorities to take steps in this direction, since there is a strong need to include use of local solar glass and other components in these schemes. There is an unexpected glimmer of hope for more remunerative prices in the shape of an increase in import freight rates from Southeast Asia, which is likely to give us some respite. Some positive signs for the Indian solar industry. Firstly, solar installations in India last year were 15 gigawatts, an impressive growth over the previous year's installations of 12.8 gigawatts. Secondly, after some hesitant steps, the government has firmly implemented the ALMM mechanism on 1st April 2024, which mandates use of only ALMM certified modules in the projects being installed in India. This is leading to a quantum jump in the manufacturing of domestic modules and thus an exponential leap in the domestic demand for solar glass. Domestic solar glass manufacturing capacity has now reached 2,300 tons per day, as against 180 tons per day in April 2019. While Borosil remains the largest non-Chinese owned solar glass manufacturer in the world with 1,350 tons per day, including 350 tons per day in Germany, 4 new manufacturers have commissioned new capacities totaling 1,300 tons per day in India, taking the capacity to 2,300 tons per day. The government has announced a target of installing rooftop solar systems on the roofs of 1 crore houses under Pradhan Mantri Suryodaya Yojana, with a promise to provide free electricity up to 300 units to the households and a provision to sell the surplus power to the grid. This will give much required fillip to the rooftop solar program and generate demand for solar modules and consequently demand for solar glass. Our German operations. As mentioned in my previous call, the European solar module manufacturing industry suffered a serious setback towards the end of the second quarter of last calendar year from unbridled imports of Chinese solar modules at dumped prices, which severely impaired the ability of local producers to sell at their cost of production. Cancellation of orders placed on them forced them to curtail their operations. This led to a cancellation of orders on GMB for quarter 3 and quarter 4, financial year 2024. The steps taken so far by the European Commission and German government, although positive, are not sufficient to bring back the demand, and there is a need for some concrete and urgent business. As informed in the last call, the company had temporarily slowed down production due to paucity of orders. Meanwhile, GMB has made inroads in other export markets to fill the gap created by a low domestic demand and has been able to resume full production from the middle of March this year. The German team is committed to carry out cost optimization steps which are showing positive results. This may help to partly offset the impact of lower selling prices in these new geographies. Now I come to the consolidated results for the quarter, which include the operations of the subsidiaries abroad. The overseas subsidiaries, including the step-down subsidiaries, have generated net standalone revenue of 55.88 crores, a negative EBITDA of rupees 31.07 crores for the fourth quarter of the current financial year, just gone by. As explained, the performance was impacted by reduced operations arising from demand slowdown as well as due to lower average selling prices. The consolidated net revenue and negative EBITDA for the fourth quarter of the last year stands at Indian rupees 283.11 crores and 20.82 crores respectively. The consolidated net revenue and EBITDA for the financial year 24 stands at rupees 1369.28 crores and rupees 74.85 crores respectively. Looking at the higher landed cost of solar glass in both domestic and export markets, enabling better prices, the strong and expanded demand in domestic markets arising from the spurt in domestic manufacturing, the assurances received across the concerned government ministries in the context of imposition of duties on imports of solar glass, finally better performance of our subsidiaries on the back of high level of operations and cost-saving measures. For all these reasons, we continue to maintain a positive outlook on the sector. The position other important markets was as under. Selected export markets have shown recovery in demand. Demand in the USA has started in a small way. We expect this to go up in the later part of this year as some more plants start module production and ramp up operations. This will raise export demand from India. We are actively engaged in improving efficiencies which lower our costs. We are negotiating an additional solar plus wind hybrid power plant with an expected commissioning during first half of financial year 2025-26. This will not only save costs for us, but will also enable us to meet a major portion of our demand for electricity from captive sources of renewable energy. Finally, the company is getting ready to file the draft letter of offer to SEBI to raise funds by a rights issue of equity shares. The proceeds will be utilized mainly to reduce the debt for the Indian operations as well as at the operating subsidiary. The board has also approved further raising of funds through the issuance of instruments or security, including equity shares or any other security convertible into equity shares, including warrants, by way of one or more offerings, including a rights issue and/or preferential issue and/or qualified institutions placement, or through a combination thereof in one or more tranches for an amount not exceeding 750 crores. In accordance with the regulations and subject to necessary approvals, including the approval of the members of the company and such other regulatory statutory approvals as may be required. This is an enabling resolution to meet funding requirements for any opportunity which may come up. With that, I would now like to open the floor to questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and one to ask a question. Participants, you may press star and one to ask a question. The first question is from the line of Nikhil Abhyankar from ICICI Securities. Please go ahead.
Yeah, thank you, sir. Thanks for the opportunity. So I just had one question regarding, so we were expecting some kind of tariff barrier to kick in from 1st of April. But most likely that in the budget that deadline has been shifted to September. So can you just brief us about what exactly has happened, and is there any scope of any barriers to be set in after September?
So actually the situation is that there's an exemption circular. The circular comprises a wide variety of items in which solar glass is one of them. And because of the impending elections, the people were very busy apparently in the Ministry of Finance, and they could not segregate which items exemption was to be withdrawn and which one was to continue. That's what they've told us. And therefore they pushed the whole thing back to 30th September. Of course, we shall be continuing to make efforts to have the exemption withdrawn at an earlier date, but this is uncertain.
Understood, sir. So, I believe that till we get any kind of an exemption, all our capex plans and everything will be on hold, and there is absolutely no scope of any improvement in realizations till the barriers are in.
No, actually, the situation is this, that we are continuing with capex as and when required, and in fact, every month we are adding capex because the demands of the industry keep changing, and we need to stay alive. And if to do so, we have to meet the demands of the industry, of the customers. That is answering your first question. Regarding the second thing, I touched upon it. The import freight rate into India from China has gone up from about $700 to about $3,200, and therefore this may have a positive impact on our selling.
Are we already seeing the realizations improve in April and May?
Yes, there is an improvement in realization already.
Sure, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sharan, an individual investor. Please go ahead.
Yeah. Hello, sir. Thanks for the opportunity. Are you able to hear me?
Yes, yes. Go ahead, please.
Yeah. So recently I saw a news that in US Solar Cycle, there is a company which is coming up with a plant of $340 million, which is about the recycling of solar glass and all the modules. And also they did mention that there is a huge supply of recycling of old solar panels and glass. Because of that, they are coming up with this. So, and in the earlier calls also, we discussed about our company exploring an opportunity for recycling as well, since there is a huge demand for that. So, do you have any update on that? Where are we on that?
We are aware about the solar cycle plant coming up in USA at a cost of $340 million. As you know that we set up our plant for complete plant for 550 tons for less than $100 million. And so I would say that it's a very expensive plant they're getting. And how much solar glass they will find for recycling, again, is a question mark. So I would say it's a very, very noble initiative which they are taking. Its financial, what shall I say, its financial performance is something which they are the best people to answer. I could not make any comment on that. So far as India is concerned, we still have some time to go before we are able to consider recycling of solar glass. At the moment, I don't see those many modules being discarded, you know. So that may probably happen after another few years, that we'd have enough. And we are exploring all the technologies which are being discussed to recycle solar modules. And there are new technologies coming up every once in a while. And since we are not under any pressure to do so right now, we are waiting to see which one is going to turn out to be the most efficient.
Okay. And 2 years back, we wanted to increase our capacity to 3 times, and because of anti-dumping duty, that was kept on hold. Assuming that this year, September, if governments put an anti-dumping duty, do you think that we have lost that 2 years time frame of the capacity expansion? Because from this September, again, if we start, once we approve and start doing a capacity expansion, it may take another 1.5 to 2 years. Considering a huge demand, do you think that we are we are maybe the behind in the growth of our organization in terms of capacity expansion and growth?
So I would say that we are actually ahead of others because we have a batch house, which is a very expensive component of the entire solar glass manufacturing plant, which is up and ready already for 2,000 tons. So if we set up another furnace, we do not need to spend any money on the batch house. We'll be saving money on the capital. The second thing, the entire electrical installation is already ready with us. So we will not need to spend any money on that, or very little money. The fundamental installation is there with us. So, to that extent, we will have a head start on others. Plus, we have the land, we have everything worked out, we have the drawings and so on. So, we would be off to a fast start in case opportunities present themselves, and we will not be lagging behind in this, at least as far as I can speak now. Every day is a new day, and we don't know how things will unfold, but from our point of view, this is what we are thinking today.
And sir, considering if there is anti-dumping duty in September month by Indian government, then how much time you think, like with all this pre-work and fundamentals ready for doubling or tripling the capacity, how many months maximum it may take for you?
About,
from there?
I would say to conservatively 24 months, but in the past we have set up a furnace in 14 months also. That's what we've done in the past. It doesn't mean we can do it in the future. But we have put up an entire furnace in 14 months from the placement of the first order to the commencement of production.
Okay. And sir, any update on Europe side? Any good news from that Europe government
Yes.
on?
The first quarter of this calendar year, which is the last quarter of the last financial year, was our worst quarter so far in Europe ever, because we were only producing from one production line out of two. Sometime in the last week of March, we got enough orders to start the second production line. And fortunately, we are continuing to get orders, export orders, domestic orders, enough to continue to use our both production lines fully. And again, the same issue which is happening in our part of the world here, which is the increase in freight rates from China, is also happening there. So markets there also are seeing a slightly better price as compared to what they were, say, a few months ago. So there should be some improvement in realization as well.
Sure, sir. And last question, sorry for taking more questions. And Glass Technology also started a solar glass plant in UAE about worth of 350 million. So my question is, like, there are many players coming up with new plants. Do we have a plan to capture these market share? Like, do we have any customers in UAE? Since they are coming up with new plant, why we are not able to capture that market? And how are they getting benefit with competition from China and Vietnam? Yeah, can you throw some light on this?
You see, the money they've spent on that plant seems to be very, very high. So the investment cost per ton of glass produced is very large, and there's something that we cannot countenance that kind of investment. So if you look at depreciation, interest and other things, it would not be very inexpensive, let me put it that way. And everybody comes up with his own luck, you can say, and with their own abilities and things like that. So I cannot really predict how they will do, but it's I guess generally speaking, the demand for solar modules worldwide is ramping up, and I hope that they find a niche for themselves wherever they can. They have spoken about selling to Europe. I can say that the three largest in Europe have shut their shutters, So that's how it is. But we'll have to wait and see how they fare.
So from our perspective, there is no much demand in Europe, in that part of the world where they are setting up the plant, because there is not much manufacturing of module happening over there. But I think they are going to be exporting, and we also have export base across the globe. So we will be competing with them in future, I suppose. And we have our customer base, which will help us to continue to sell our products.
Sure, sir. Yeah. Thank you. Thanks, and appreciate your time, and wish you all the best, sir.
Thank you very much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vijay Gupta, an individual investor. Please go ahead.
Hello.
Hello.
Yeah, this is a little correction there. I'm Vivek Gupta, not Vijay Gupta.
Hi, Vivek ji, boliye.
Yeah. Sir, I spoke with you in the last conference call also, so I'm just extending my conversation on those lines. So I just want to understand what is the cost of glass production which we are incurring today versus the Chinese glass prices which are being sold in India?
Chinese glass prices are much lower than the cost of production of glass in India. Because see, we pay all duties and taxes. We have no kind of rebate. We have no we have no support from the government in our selling prices.
So the cost of production, not the selling cost of Borosil, the cost of glass production which you are incurring currently for production.
Just to clarify, the Chinese are having subsidized cost versus Borosil has no subsidies whatsoever. So from that perspective, our costs are a little higher. In terms of the percentage, if you were to know at what price Chinese sell versus what our cost is, it is about 10 to 15% higher in terms of our cost. So that is the kind
So-
of subsidies they have.
So I wanted-
Their selling price is offset by the subsidies. Their cost may be equal